Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 13th day of July, 2017, and this is the Daily Report for gold and silver. After 3 days of moderate climbs in both gold and silver, we have a price descent today with both gold and silver trading lower. Gold only trading off about $1.90 on the day, closing at $12.1720. That's future settlement in the August contract, down about a little bit less than 0.2%. Silver had the greatest percentage gains, and on a down day is following suit with a pretty dramatic drawdown, down about 1.3% on the day, closing at $15.68, down about 20 cents on the day. So traders, it looks like we have an inside trading day, closing moderately lower on the day. We do have a red candle. That's significant because we did get a close lower than the open. That's why it goes red. We did get a higher low, but we also got a lower high. And so the entire range is within the range of the prior day. Testimony given by Janet Yellen both yesterday and today has really ignited a risk-on environment. We had the Dow Jones Industrial Average moving to an all-time record high, recovery in the NASDAQ as well as the Standard & Poor's, and as we had that risk-on environment, we have seen pressure come into the precious metals markets, with silver really taking the blunt of the downside move. If you recall from yesterday's show, we talked about the fact that we were getting near issuing some sort of a buy signal in the market. We did have 3 days in a row in which we had higher pricing in the market, but the fact was the advances were extremely moderate. Today we have a moderate drawdown. Currently, I'm looking at real resistance sitting at around 1224. Now that is a 78% retracement, and it is a retracement of this longer move beginning at these lows at around 1203, moving up to these highs at 1300. So traders, as we've spoken about on many occasions, silver tends to perform with the greatest advance as well as the greatest drawdown, depending on whether the market is moving up or down. We certainly saw that today, closing definitely on the lows. You can see no lower wick on that. We are absolutely looking at a market that has tracked higher, but each move fairly moderate over the last 3 days. And this sell-off is absolutely, in my opinion, fairly significant, closing down almost a full 1.5%, losing about 23 cents. We can absolutely see silver under pressure. In terms of our current levels of support and resistance, we absolutely are looking at resistance at around $15.90, just shy of $16 per ounce, and that is a 78% retracement, and it is a retracement from the entirety of this last move, starting at just around $15, going up to about $18.66. Traders, as I said, I am looking for an entry point for both gold and silver, but that will not occur today. In other markets that we follow, statements made by Janet Yellen, of course, the chairwoman of the Federal Reserve, over the last 2 days have had a bullish influence on U.S. equities markets, which continue to have modest gains. However, those modest gains are interesting, taking the Dow Jones Industrial to a new all-time record high. Dollar index pretty much unchanged. The NASDAQ as well as the S&P showing decent gains on the day, and oil closing up about $1.28 per barrel to close at 46.07. So traders, although the NASDAQ Composite along with the Standard & Poor's 500 did not close in record territory, we certainly can make the case that the Dow Jones Industrial Average did, closing at 21,553. This is a weekly candlestick chart. Without a question of a doubt, we have closed at a new all-time record high in the Dow. That, I believe, is in direct response to a more dovish tone by the Federal Reserve and the probability of further rate hikes this year greatly reduced. I believe now we're at a 52% probability that we will see a rate hike in December. Traders, as we spoke about in the technical studies section of today's report, the failure today to have any kind of real gains in either gold or silver has deepened my concern that the moderate gains we have seen Monday, Tuesday, and Wednesday might in fact be short-lived. For that reason, we are not issuing a buy signal in the market and are maintaining our neutral stance. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.